Hi,
Good morning, Alan, and
Monique,
with Hot Homes Real Estate.
and we are here to share with you mortgage and how they relate to credit scores. As you and I all know, the first thing that a lender is going to do is run your credit. And with that, we need to protect it. We always tend to say, especially to our younger followers or our younger people, is protect your credit, completely protect it. I've seen too many times that a young person has lent they've used their credit to borrow on behalf of a sister, brother, mother, dad, whoever.
Yeah,
And
themselves, like buy what they want.
not even that. That
That's usually
is
lending to
fine.
them.
That's your own problem. But when your blood relatives or friend or something asks you to borrow money, I am hugely against it. I don't even think I would do that for my own children. Not that it's mean, but I just wouldn't.
I don't think I'd use my credit to help them out.
Yeah.
Because then if you trust them you have to trust them with your credit.
If you're going to help them, you need to be completely ready to pay the entire bill. Like if you're on a car loan, then you better be ready and prepared to pay for their loan payments. Just assume it.
Yep.
I think you just assume it. If you're willing to assume that loan completely, then go ahead and do it. If you're not, then don't do it.
Yeah.
Because you're basically going to possibly really ruin your credit, because if they stop paying, you are 100% liable.
Yep.
We just had an issue with, what was it? In rental, we had a group of kids all rent together. Two of them wanted to leave, and something with the leasing office, they could not leave. They could not meet all at the same time to be able to remove those two people. So they stayed on that lease, even though they weren't living there. The two residents that stayed there destroyed the house.
Stop paying rent.
Stopped paying rent, destroyed the home. How much money did they end up having to pay?
I think they went after for over $15,000.
Over $15,000. I have to let you know that two of the members, one that left and one that stayed, were brothers. Blood. After it went to court to be mediated and arbitrated, all four of them were liable, but not equally liable. Those who made more money paid more. So guess what? The two that left, the more responsible ones,
are making more money.
And therefore they're paying the majority of the damage that the two others that stayed in the residence made.
Yeah.
Totally unfair. It just makes me sick to my stomach.
And the problem is they don't have a choice if they want to pay that money back, because it's pulled out of their checks before they even receive their check. They go after them at work. They hit them before the checks come to them. So they can't even be like, well, I'm not paying it because it's not fair. It doesn't matter. The company that they rented from is going to get their money back. And so they have chosen to hit their bank account. So in this situation, the two that left have been hit with not only like an eviction, their credit's been tagged, they owe, they have a landlord dispute, they owe money. It's just hurting them all around. So very careful with protecting your credit.
Yes.
Even with family, which is sad to say.
It's sad.
But even with family, you got to protect yourself.
Exactly. And these poor boys and girls, I feel sickened to my stomach. But that's why I continue to tell people, please, please, please protect your credit.
Yes.
Do everything that you can. So did you know that Americans with nearly perfect credit scores are reaping the rewards of record low mortgage rates? Did you know that?
That's what I've heard.
I know, because we're refinancing and we're getting the best rates.
Yes. Better credit, better rates. That's what it equates to.
Yeah. If you go back to look at one of our other segments, we talk about how we're actually refinancing and how we're going to use the money to basically add more properties to our investment portfolio. Yeah. So anyways, it's a trend that underscores the economic divide created by the coronavirus recession. The typical credit scores for mortgage borrowers rose to 788. Can we 788? in the first quarter, and it's a record high. This is reported to us by the Federal Bank of New York in their quarterly report. That's the highest level in nearly 2 decades. It's outstanding.
That credit score that high.
Yeah. During the era of loose lending that led to the Great Recession, that median credit score of mortgage borrowers fell to 707. So very big difference. What is it? 81? Is that right? My math, right? Yeah. 81 points.
81 points, which is a lot in credit scores.
It really is. And that's the difference between possibly like 0.5%, 1/4%. But anyways, it's money that could be taken away from you. Yeah. So meanwhile, only 1/4 of borrowers who landed home loans during the January through March period had credit scores of less than 742. That's just 10%. Just 10% had credit scores below 688, according to the New York Fed's data. The numbers have been skewed upwards, in part by large share of mortgage refinances in 2020 and 2021. People who already own home generally have higher credit scores than first-time homebuyers. Now, that's kind of a little bit of reverse psychology, because when you don't have a home, you should be like scrutinizing your credit score, right?
To get a home.
To get a home.
If you want a home, you should be like, really?
Like,
but they don't.
They don't.
Don't see it.
And so then when you have a home, you can kind of maybe like take the pedal off the gas a little bit, maybe. I don't know. But people are not. They're not doing that. So it's a little bit counterintuitive, I guess. So I think we should be the other way. Well, actually, we should all just have maintain financial responsibility. Being financially responsible will bring you dreams because you, in emergencies, you can help yourself. Yeah. So it's so important. So step one, protect your credit score. Those of you who are just going into college or just graduating or just getting your first job, protect your credit score. Do not let anybody use it. Yep. Okay. Do not get a loan for anybody. That is your protected, like almost like your fingerprint, right?
Yeah.
It is yours alone, and you have to protect it. You need to make sure it doesn't get burned. That is your sole responsibility, and no one can take it from you. They legally cannot take that from you. So protect it. I know everybody has good intentions. When I was younger, I took out a loan for a family member, and I'm lucky. There was, nothing bad happened, and I've had really good experiences. I do have an incredibly awesome family, so I think that might be why. But yeah, I do.
So families take care of each other. Yeah. But it's still not a reason to let them. Very cautious about loaning to them.
Yeah. And so knowing what I know now, if I would have known that, after I graduated from college, I don't think I would have done that. But I'm glad I did, because I like helping other people. But still, do what I say, not what I did, I guess. Okay.
Or just know there's a risk if you do family that you like when he said you have to be able to take on that rent payment if you co-sign for them, or take on that car payment.
Yes.
And be able to do that and know if they stop paying. And you have to keep on top of it, because sometimes they won't tell you they stop paying.
Yeah, that's true. They won't tell you.
Yeah.
So anyway, what's more? Well, you could ask for a secondary statement to be sent to you.
Yes.
Like, we are always named as secondary insured on all of our rentals. So we represent an owner who has a rental property. We always ensure that the home insurance we're listed as a secondary, and what that means is anything that gets sent out to the owner and to us. So we always know if the home is being covered or has lapsed in payment or anything like that. We're able to keep an eye on it. So I would imagine that the same thing can happen with credit cards, because they want to get paid.
If you're a co-signer, yes, you can request that.
Yeah. So make sure you're getting a statement. So what's more is that mortgage lenders over this coronavirus recession time, they grew more risk adverse during this time. So in the early months of the recession, mortgage brokers described being required to complete near obsessive verifications of borrowers' employment and incomes. So American fortunes have diverged widely during this recession, as we've seen with the craziness of like overbidding and people have tons of cash. I think they're basically just taking money out of their homes and then buying more homes. That's what we're doing.
Yeah, I think that because they're paying so much over.
So there's been a shift in psychology, because what we've been taught in our generation is like, make sure your primary residence is totally paid off and be really, fiscally responsible. But when you're too fiscally responsible, you cannot actually use your money correctly, or not correctly, but you cannot make money. So you have to take a little bit of risk. Now, I am working with a client right now. She's amazing. And she's older. And so if I was to be advising her children, I would say be a little bit more aggressive. This is kind of like what investment gurus all say is, when you're younger, you can take on a little bit more risk because their goal is for when they're retired and they can't work anymore. Well, the older person is retired. So cash flow is the most important entity. So when we are deciding like what to put down and how to use her money, it's very, very different. Your down payment's different. Everything is different because now you're protecting your money while making it make money for you.
Exactly.
So like, for instance, for us, we're doing this refinance. We don't expect to make a lot of money off of it immediately. We know that when we retire, that's when we're going to make the cash flow, because that's when we need it.
That's when we need it.
Yeah, we don't need it right now.
Yeah.
So our decisions are made on our current and future circumstances. How many years do we have until retirement? Do we want to take a 20-year, 30-year, 15-year mortgage loan? So we're able to really fine tune where you are, what your purpose is, and what you want to do. But with all that said, credit score needs to maintain high. Yeah. And we're going to tell you how high soon. Okay. So there are some people who've definitely suffered during this recession, and it is the restaurants, the hotels, and other service sector employers. They're battered by it. And specifically, I don't know so much about the hotel business, but the restaurant business, we do have a few clients that are working in the restaurant business, and this is general information for anybody who's stated income. But if you are a restaurant owner or a hotel owner or a business owner, you are stated income. Some of the times you actually have incorporated, and therefore you start having a paycheck, which is very easy for a lender to look at and know exactly how much you make each month. But when you are stated income, you are scrutinized. What we've done, you want to tell what we've done?
As far as us?
Yeah.
Well, what we've done is we've incorporated our business. So we have a way we make sure that we know how much money we need to make our next steps.
Yes. So
and how much you have to show, I guess, is the right word. Not making.
So we don't make that decision. We have partnered with great lenders, like the person that we've gotten this information from. Dan Dobbs is a great lender. We have other lenders too that we've used. And what we do is we say, hey, this is the type of home. This is how much we want to spend. How much do we need to show? Because even though you're truthfully writing off certain things, sometimes you just want to take the hit so you can have the home that you need to be in. And so they are very good at saying you only can write off this much. You're going to have those electricity bills or the rent. You're going to have to eat it. You have to show that as income. So it's really important that you know exactly how much income you need to show to be able to reach your goals, especially when you're stated income. Our restaurant clients, one in particular was commingling their business and their personal accounts. And so the lenders couldn't figure out what was income and what wasn't, and it was actually washing. So what they were reporting to the government was nil. And so they basically could not buy a home.
But they didn't show any income.
Yeah. And so hopefully this year they're going to be able to work with the lender and know exactly how to show the right income for this next year. They will take a hit, but guess what? Owning a home, once you own a home, you can go back to your ways. But to get a home, you have to show the income.
You have to, yeah.
And the savings, whatever you want to do in your own financial life, that's fine. But when it comes to a home, you got to know exactly how much you need to show an income in order to purchase. You can tell us you make a certain amount of money. You're still standing here. Obviously, you're eating and you have shelter, but we understand that you're probably making that money. But unless you are reporting it correctly, like the poor lenders can't do anything to help you.
They won't move. They won't move forward if they can't show that you can pay for the loan.
Yeah,
even though you can pay for the loan, if they can't show it, they're not going to lend you.
Well, you have to remember, they have to speak to their investors. They have people who are sharing money with them to help us to be able to take loans. So, that's risky. And so they have to scrutinize it. And so I think it's really important for us to just respect that they actually have a really good purpose. So I don't know how many of you know what the highest possible credit score is. Did you know?
No, I didn't used to. When I was just before I came into this industry,
I was like 800 something.
Well, it's up there. Yeah, it's
okay.
Yeah,
so it's 850. Okay, but you know what? That number is not that important. There's another number that is way more important than 850, and it's the one that's going to maximize your greatest interest rate when you're getting a loan. So the higher your credit score, the lower your interest rate. The lower your credit score, the higher your interest rate. So obviously we want to go up, up, up. But do we all need to be at 850?
No, because over this certain number that we're going to share with you, it doesn't matter. Once you reach that number between that and 850, it's all the same.
It's all the same. So a score higher than 740 is considered excellent.
She's in that category.
I was so excited. I love getting A's. Like in school, I loved getting A's.
Yeah. So pretty much the 740 to the 850, you can be 740. You're getting the same rate as the person that has 850 because it doesn't matter. The banks or the lenders have said 740. Excellent above that.
Yes. So a FICO score is not an indication of wealth. So don't think that we're like super wealthy because we have a great credit score. No. No, but we are financially responsible. So anyways, this is told to us by Chris Hogan. He's a personal finance expert. And he said it's more of an indication of how you've dealt with your debt. So rising scores come with an upside for both lenders and borrowers. For example, a homeowner with a credit score approaching 800 is exceedingly unlikely to default on any of their loans. So for borrowers, that means little risk of financially devastating foreclosure. So what can you do? Yeah. Okay, so we're going to tell you what you can do. And we're going to add, we're going to add a little bit of side steps to this and that. So first, we just learned never, ever, ever share your credit identity with anybody else. 2, 740 is the number. That's the number that you want. That's the goal. You don't need to get 850. Now, how do you raise up your credit score?
That's always a good question. A lot of people don't know how to get up there, how to raise your credit score. They go every day and do their stuff. And how do you do it?
Okay. So listen to me right now. Your credit score is the single most important factor in determining your mortgage rate. Got it? Okay. Let me repeat it again. Your credit score is the single most important factor in determining your mortgage rate. So here's how you boost it. Okay. 1, pay down your credit card debt. If you choose between tackling debt or scraping together a large down payment, it is wiser to focus on the debt as that will improve your credit score. The second thing, you got it?
Yes. The second thing, you want to pay your bills on time. So the payment history plays a lot into your credit score. If you're late, it shows, and that brings your scores down.
Yeah. So if you keep on forgetting to write a check for any reason, I mean, come on, every bank has has a way to automate your regular payments. And this just helps you to avoid missed payments, and it builds your emergency savings as well, because you can drop automatic payments into your savings account. So ding, ding, you can actually improve your credit score while you're building your savings account. So the third one is Know when enough is enough. The best mortgage deals go to borrowers with scores above 740, but improvements beyond that point won't do much to affect your rate. So keep an eye on your score, of course, but understand that boosting it from 790 to 800 won't get you a better deal. So, so one more thing. So I'm going to say number 4. It is so we get to review lots of people's different credit scores, and the 4th one is try to maintain your balances to 20% of the maximum of each debt. So for instance, if I have a credit card that allows me $10,000, you want to keep that balance to $2,000 or lower. That is the difference that we have seen between 800 credit scores and 740 to 800. But that is the common theme that we've seen among those who have 800 plus, is they maintain their balances to 20% of the maximum. 20% or less of the maximum allocated for each one of their debts. And that's made a huge difference. But again, after 740, it doesn't really matter. You have established yourself as being financially responsible. And that, in the mortgage world, is the most important criteria for getting a loan. So, give us a call if you have any questions. If you would like to get a hold of Dan Dobbs, I went ahead and I put a link in the chat for you to go ahead and ask him some more questions about how to boost your credit score, or if you are able to get a loan at this time with the credit score that you have. But he is always providing us realtors with great information. Yeah, I really appreciate Dan Dobbs giving us such awesome information weekly. So anyways, we're Monique and Alan with Hot Homes. Give us a call, 909-296-6668, and we'll be back on Monday.
Yeah, have a great weekend.